Rishi Sanghvi, MD of the company Johnson, right now to talk about the numbers and the outlook ahead. Rishi, good having you. Thanks so much for taking the time out. We didn't quite get the YOY comparisons because I think due to the EPC business shift, you had not, we didn't have the Q4 comparisons, but quarter on quarter, your numbers looked good, showed a bit of an uptick on most counts, including margins. The street seems to be a bit disappointed. Is it because of the call yesterday and the cautious optimism that you laid out, or is it something else?
Good morning and thanks for having me. You know, I never comment on market movement and speculation. All I can talk about is our performance.
Let's do that. Let's do that. So how do you sum up the quarter?
Yeah, I think we had our best quarter for the financial year where we ended with a profit after tax of 53.72 crores. Our capacity utilization was around 79%, and our yield, our blended average yield was around 2%. So I think things are moving largely in the right direction, especially if we factor into the account that there was a general election in the last year, as well as there was significant slowdown in government spending, as well as a prolonged monsoon in last year. But the last quarter's performance is indicative that things are moving in the right direction and that the economy will continue to fire on all cylinders in the coming financial year.
Okay, let me try and pick up a few things that analysts have pointed out. Our own colleague Varsha spoke about as well after attending your con call, that you are optimistic about improving the capacity utilization levels for FY26, but the cranes business, which is the higher margin business, there the growth rates did you guide to maybe 10-15%, part one? And is there higher competition coming in, Rishi, out there for you?
So, you know, if you look at our base year, which was FY23-24, it was an exceptional year where we were able to hit a 63% EBITDA, 84% capacity utilization, and a 2.2% yield. This was an outlier year. So this year, we have ended at a 73% capacity utilization and a yield of about 2.05%. Going forward, we see that our capacity utilization will land anywhere between 75 to 80% at a 2% average blended yield. And we do expect the top line to grow anywhere between 10 to 15%. Now, you know, I'm wary of giving forward guidance because if we overcommit and underdeliver, it's an issue. And if we underpromise and overdeliver, it's always an issue. So, you know, by way of abundant, prudent caution, I think we're giving a realistic growth in the crane business of 15%. Bear in mind, the overall revenue will grow between 25 to 30%. And we have a significant order book to back that.
Rishi, hi, good morning. Tamanna here. I would say between the two, not that you're asking me, but between the two, it's always better to under-promise and over-deliver, I suppose. But, you know, having said that, explain to us the strategy about moving to wind EPC, which is a relatively lower margin business, if I'm not mistaken. Can you explain that thought process to us and what the margins will look like? Because that's what's impacted margin numbers this quarter as well, isn't it?
Yes, so, you know, our push to get into the wind EPC is basically to deliver turnkey EPC services where we are involved in the renewable energy wind farm construction from conceptualization to commission. Now, our customers are asking us to do this. We have a track record of erecting more than 15 gigawatts in the country. And all the IPPs are looking for a credible partner to help them build their wind farms. So we are tracking towards this wind EPC business where we are giving a turnkey solution from conceptualization to commission. The revenue last year was around 240 crores and we had an EBITDA of about 17%. Now the business is still in its incubation stage, and as we scale up, we believe that the revenue for next year will double. And as we scale up, we believe that the EBITDA, again, on a abundantly cautious guidance, would be anywhere between 10 to 12%. So that's where we believe that the EPC business will double in revenue next year, and it will continue to grow year on year.
But having said that, if I compare it to your core business of cranes, what is the margin comparison?
There is no margin comparison, and frankly, I don't know any other business that can give you an EBITDA of 63%. That is a capital intensive business.
So no, which is what the concern, and I know you're not going to respond on the stock, and you should not. But then I'm just voicing that concern that you're moving to a business which is relatively low margin, and how much of an upside do you see there?
So if you believe in the renewable growth story of India, and if you believe in what's happening on the renewable space, then the headroom for growth is infinite. Having said that, we are not moving away from the crane business. We continue to invest in the crane business at a 75 to 80% capacity utilization with a 2% yield. We are still projected to do another 240 crores of capex in the crane business, of which 215 is in cranes. We have also internationalized our crane business, and we are moving towards Saudi Arabia. And it's too early to comment, but that is going to become a significant portion of our business going forward as well. So I think holistically, if you look at it with an overall lens, there's a couple of things that the group is doing. And I believe that this will create tremendous shareholder value going forward.
Rishi, what is the macro looking like? Would wind energy installations exceed the 5 gigawatts? Did you talk about that in a con call? Please tell us. And does the macro look set for that to continue, and therefore for growth for your business as well to continue?
Yeah. So, we're coming off the first Q1 calendar quarter of Jan, Feb, March, where we've had historical capacity addition of 1.8 gigawatts. Year on year, that's a growth from 1.15 to 1.8 gigawatts. So the country is adding significant amount of capacity addition. Now, will the country cross? I believe the capacity addition for the financial year gone by is anywhere between 4.3 to 4.5 gigawatts. Next year, we are projected to do, in my opinion, anywhere between 4.5 to 5 gigawatts. However, there are a lot of issues related to on-ground offtake and project delay execution. These issues are related to things like substation connectivity, PPA signing, creation of the infrastructure at site, which is the land aggregation, the evacuation infrastructure, dealing with the local issues at site at the grassroots levels. There are turbine supply delays as well. So all of these factors may impact the capacity addition in the coming financial year. But safe to say anywhere between 4.5 to 5 gigawatts in this coming financial year.
Okay. And we've done, I think, 1 gigawatts in the month of April. So maybe crossing 5 in the remaining 11, as you're saying, may not be as difficult per se. Okay. What about, Rishi, what about FY27? Is there a 2-year plan that you have in mind? Because as you said, you're expanding globally. There is the new business that you ventured into, the wind EPC, which might take better wings in the current year. What about the following year? Is there a 2-year, 3-year plan?
Yes, definitely we have a strategic plan. In fact, we have a plan till 2030. But I would like to say that next year we have, in terms, I would again like to give guidance for next year and not the following year. But next year we're looking at an overall top line growth of 25 to 30%. We're looking at a 10 to 15% growth in the crane business. We're looking to double our revenue for the wind EPC business, ending with an EBITDA of between 10 to 12%. The project EPC business is also looking to double with an 8 to 10% EBITDA. So overall, we are forecasting a 25 to 30% growth on the top line. And I think this is going to be significant. If you look at us about a year ago or 2 years ago, we are doubling revenue. Of course, the blended EBITDA will take a hit, but directionally, I think we're heading in the right direction, along with our international expansion in Saudi Arabia, which will definitely add to margins and top line in subsequent quarters.
I want to know know more about that, if that's all right. Saudi Arabia, and I think you have a subsidiary in Vietnam as well. What is the growth prospect there? Do you see those two businesses or those two subsidiaries as a big driver for FY26?
So to clarify, we have wound up our operations in Vietnam, but we are extremely bullish on the Saudi Arabia growth story. There's a number of massive infrastructure projects that is happening in Saudi Arabia, uh, from the World Cup, World Expo, Asian Games, to all the giga projects, the PIF projects, and all the construction activity that is happening in Saudi Arabia. We believe that we will develop significant traction in Saudi Arabia, being the fourth largest crane rental company in the world. And we definitely believe that the market is sizable for us to replicate our scale and size in India, in Saudi Arabia. So going forward, we see that there will be significant traction coming from Saudi Arabia. We're not early to the market. A significant amount of L&T's revenue, KEC, all of AFCONs, all of these Indian EPC players are already present in Saudi.